So in 2 days, the Federal Reserve is going to come out and there's a 90% chance they're going to cut interest rates. So if you're a homeowner, you're a home buyer, you're sitting there thinking, okay, in 2 days, I'm going to get a little bit lower rate. Well, you might be surprised because over the last 5 times the Federal Reserve cut rates, actually these things went up. So in today's video, folks, my goal is to explain to you guys what in the heck's going to go on with those and the whys behind it after the Federal Reserve cuts rates. So without further ado, folks, let's dive into today's news. My name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I've been doing this for over 30 years. I'd love to help you navigate this if you're looking to buy or refinance. I'll give you all my information at the end of this video, but the intriguing thing about me is our slogan. It's one application, one credit pool. We're going to compare your loan and your rate with over 30 different lenders. How? Why? I'll explain that at the end of this video. You're here for these. So let's get over to it. So a lot of people don't understand. They think the Federal Reserve, well, they control rates, right? Yeah, they control rates, but they don't control mortgage rates. What they control is the federal funds rate. You don't really need to know what that is, but here's what's happened since September 18th of 2024. Actually, there was another cut in September of 2023 when we had mortgage rates at 6.2 at that time. Federal Reserve cut and rates went all the way back up over to 7%. So here's what's happened just in the last 12 months. So in September, they cut rates 50 basis points, mortgage rates went up. Early November of 2024, they cut rates and rates went up. December of 2024, they cut rates and mortgage rates went up. You can see the pattern right through there. So they're going to cut this time. There's a 90% chance. What's my thoughts on all this? Well, let's get over to my lock or float so I can explain to you guys what the most likely outcome, it might not be the outcome you want, but what the most likely outcome is, and should you lock or float? So the first thing I want you guys to understand, especially if you're a homeowner or home buyer, how do you monitor this? And what does rate and lock and float actually mean? Well, if you bought your house, you probably understand it because you already locked in a rate and you closed at. How high was that rate? Is it in the 7s? Well, if it is, maybe go over to my RateWatch tool right through here and give me some information on your mortgage and let me know if you'd like to refinance. So what I did up there is I created RateWatch 2.0. All you need to do is put in your mortgage information and let me know what interest rate you'd be like to be contacted to go over the payment, the cost, and how much money it might save you. So check out that. If put in your information, we don't sell the data. It most likely is going to be, yes, me, yours truly, reaching out to you. So don't be surprised one day if I'm like, hey, your rate watch just triggered. Let's start saving you some money. So, but let's go back over to this right through here. Here's the confusing part if you're looking to buy. Okay, so you need to monitor rates. This is one of the things we can do for you. If you're a homeowner, like I said, we can do it right through there. If you're a home buyer or you're looking to build, how can we help you? Well, we can help you through here, navigate should you float or lock. We can also navigate you into making sure you're optimizing your credit scores. What income do lenders actually use? And what mortgage product is best for you? Not for the loan officer. But first, let's go over to lock or float. What float means is, let's say you probably understand stocks a little bit more. So let's say you really like NVIDIA. You're intrigued on what NVIDIA is doing right now. So you're watching that stock. That's called floating. You didn't really do anything. You didn't buy it. You're just watching it. Well, that's actually called you're floating the rate. You're just watching the rate. So we can do that for you. Locking means you basically bought the NVIDIA stock. So you lock in the rate and you're done. You got that rate. Okay, so here's what we do here. Let's say you locked in as a homeowner back, a year or two ago and you closed and you're at 7.5. We can hopefully help you refinance and save a lot of money. But let's say you're looking to buy or build down the road. What should you do? Well, if you're closing within 30 days, just lock. Otherwise, just float. And here's my expectations. Here's where the news really starts. Here's my thoughts for 2026, and this is just a partial piece of my forecast. The Federal Reserve is going to have a whole new cast of characters next year. That's number one. Okay, they're going to be packed with a lot of people that the Trump administration really wants. Hassett's probably going to run the Federal Reserve, and he is a pro-Trumper. So we're going to have at least 3 to 4 people that are completely behind Trump in the rate directions. You just need a couple other people to consent with that, and you'll see rate cuts. But that's not really what's happens, because if you go back in the past, we saw where even when the Federal Reserve cut rates, mortgage rates went up. So what really focuses in on these and what really affects mortgage rates are a lot of economic news. And this is why I change maybe my tune every once in a while, because, if I'm on the side of locking today, well, if news comes out tomorrow that affects that, I'll come in and change my mind. So I have no problems changing my mind. But that's why I come in each day and tell you exactly what to do. My expectations next year are this. We're going to see inflation basically sticky, but stable. We're not going to have a huge spike. And actually, I'm expecting it to start really coming down over the next 6 months. And that's on my piece. On the jobs report, I think attrition is just going to weed out a lot of jobs. And that's about it. You're not going to see a huge, massive amount of people getting fired, but you're not going to see a huge amount of people getting hired because the uncertainties in the economy. But the economy is okay right now. The uncertainties are the biggest concern. If the economy was bad, plus the concerns of the people, that'd be detrimental. But right now, the people feel a little bit, I think on average, just cautious. And that's why, the markets are doing what the markets are doing right now. So if you're closing within 30 days, just lock. If you're looking to buy, build, I don't think you're going to get a shock down the road. I think what you're going to see is just stabilities in the market. My expectations for Q1 is rates at 5.875 to 6.25. I think that's where we're going to be as long as the data kind of comes in. And please, subscribe down there, because every day when I come in, I go over the economic news, I go over should you lock or float, and I give you the actual advice for that day, because the next day's data can change everything. So that's why we created our website through here and all the tools that we have for you here. So if you're a home buyer, you may be looking to build, reach out to us. We'd like to get you pre-approved. Now, there's a big difference between pre-qualified and pre-approved. If you went to one of those websites and got pre-approved in 30 seconds, I can almost assure you it's a pre-qualification. So reach out to us at the Rate Update. You can give us a call. You can schedule an appointment. You can even ask Dan a question up through there. So check out that. If you're a homeowner, check out this RateWatch tool through here. Let's say you already got a quote and you're like, Dan, you had that slogan, one application, one credit pool thing. Let me explain to you guys what I do and how I do it. The bank I work at provides me licensing in all 50 states as well as Puerto Rico. Here's the cool thing. We're set up with over 30 different lenders. Taking your loan application and reviewing it on what better rates we can get out there with over 30 different lenders throughout the entire country. These are banks, lenders, mortgage companies, and even credit unions. You can't do that on your own. So let us take over the heavy work for you on all this. So just visit me at therateupdate.com, folks. I'd love to help you maneuver through home ownership, or maybe you're in that home and we're just trying to help make that housing a little more affordable for you. So thanks for watching. I come out each day to explain to you guys what's going on with mortgage rates and the whys behind it. And I'd also love you to help you out with your mortgage if you need any assistance. So thanks for watching. I'll be back here at the closing bell to let you know how all this mess ends for the day. Thanks for watching, folks. Bye-bye.